Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, yet another record high for stocks. We'll ask the investment committee what to do at these levels as talk of a possible AI bubble gets a little bit louder today. Joining me for the hour, Josh Brown, Stephanie Link, Amy Raskin, Rob Sechin. We are at record highs yet again, as I said. The 31st time that we've done that this year. It's been pretty remarkable. As we know, Rob, we are green across the board. I did mention that this AI bubble talk continues to lead many conversations. There's a tech conference in Italy, Goldman's David Solomon and the Amazon founder Jeff Bezos both speaking there, both making some interesting headlines of the current environment. Solomon, quote, "People are out on the risk curve because they're excited. There will be a reset, a check at some point, a drawdown." Bezos, quote, "Investors have a hard time in the middle of this excitement distinguishing between the good ideas and the bad ideas. That's also probably happening today, but it doesn't mean that anything that's happening isn't real. AI is real. It is going to change every industry." He talked a lot about a good bubble, one that's industrial, not financial. What do you make of those comments and the overall conversation that I think more people are having?
Sure, investors are excited, and sure, it is real. I mean, we've experienced supernormal growth in these companies over the last 5 years, annualizing at about 40% a year growth. And we're in the part of this cycle where CapEx is really, really heavy. But remember, we're going to move from a period where CapEx is heavy and new leadership is going to emerge because it's going to move to the application of the technology. We're just not there yet. We're not willing to admit that we're there yet.
Are you concerned at all about a bubble based on all of the CapEx that's going on and some of the conversation that's out there? The Solomons, people are excited. They're out on the risk curve. Bezos, people can't distinguish between the good ideas and the bad ideas. So you just throw money towards everything and hope everything works, but inevitably nothing all works. Right? It doesn't always all work.
When we talk about bubbles, we tend to lean towards valuation. And we all pay attention to valuation on this show. But it's when the earnings trajectory is going to show. When you're going to see that change is when CapEx starts to slow. We're seeing really no signs of CapEx slowing. And so until you see that pivot point, I think it's going to be more of the same, as we've said before on the show. But at some point, you're going to have to switch from the cyclicals, the semis, the Mag 7s, to the application of this. I think there's a lot of hope that you're going to see a broadening out in this market, too, which we have not seen. The cap-weighted indices are doing really well. The others aren't. And so I think we're more of the same, at least through year-end. And I think that's probably what propels us to, 7,000 on the S&P.
I mean, Steph, you could be just years before you get into any kind of bubble trouble, as we learned in 2000. Greenspan made his thing 4 years before the irrational exuberance thing, 4 years before the whole bubble burst. So I guess these conversations are useful to try and take stock, if you will, on where we are. If history is repeating itself, if it's at the very least rhyming. To Rob's point about CapEx, wow, Bank of America is so bullish on CapEx. We expect annual investments to nearly triple between calendar year 25 and 30 to over $1.2 trillion plus, constrained only by the ability to scale buildings and power. So this isn't stopping anytime soon. Whether it inflates a gigantic bubble, one won't know until probably it's too late.
Yeah, I mean, I think we're in very early innings. CapEx is not just coming from the technology companies. It's coming from several different industries, the industrials, utilities, the pipelines, the power companies, et cetera. So it's not just AI. It's data center, it's grid, and it's power. And Tom Fanning, who's the ex-CEO of Southern Company, was on CNBC last week talking about how we're going to need 24/7 capacity and energy, and we just don't have it. So I just think that this is very early innings. I think that you can play it a number of different ways. It's not just Mag 7. We talk about the industrial companies all the time, building out data centers and building out the grid. It's the IPP companies. It's the utility companies. So that's why I don't think it's a bubble. Because
some say those are in a bubble.
I don't think so. I don't think so, because you have this massive investment across every different industry.
Yeah, but
that's why I don't think it's a bubble.
Hoping that it all pays off. And
the cost actually, the financial services companies are talking about the cost coming down from using AI like by 30 to 40%. And a lot of that is going to lead to job losses eventually, of course, but they're saying that it is very beneficial to use AI. I think we all would say that, but it's the real numbers that prove that it is such a strong trend.
Okay.
And also it's the ROIs. Companies are seeing ROIs, monetization. Ask Meta.
Okay. So on the notion of what inning are we in? Josh, Morgan Stanley's Lisa Shallett takes a crack at that this week, earlier in the week, and said, quote, given the Gen AI CapEx story's centrality to both markets and the economy, the most important question for investors in the next year is what inning are we in? When it comes to market discounting scenarios, we believe we are closer to the 7th than the 1st, starting to see cracks. All based on this idea that CapEx is going to carry this market until it doesn't. What do you think?
I'm not smart enough to be able to pinpoint what inning or even tell you whether it's the earlier or the later innings. What I can tell you, and I think I am qualified to say this, there's going to be a correction, even if we're only in the first inning, as the technologists would tell you. There's just absolutely no way you can have stock prices, hundreds of companies, all revolving around this theme, spread out from industrials to utilities to communications to semis, software. You cannot have of activity and bullishness and Empire State Building-esque vertical charts in perpetuity. It's never happened before, and it won't happen this time. There is absolutely going to be a reckoning. That's not a reason to not invest, because as we've seen over the last 15 years, corrections happen really fast. People don't even get a chance to panic if and when they happen. So I don't think that should keep you out of these stocks or being in the market. I just think people need to calm down. Maybe the right focus is position size rather than some sort of binary in-out decision. And now I'm going to say something that's going to sound ridiculous on its surface, but give it a few hours, think about it later. You'll recognize how profound it actually is. The only thing that will keep this rally, just hear me out and you'll understand.
Go ahead.
The only thing that will keep this rally going is if the rally keeps going. And I know that's a tautology, but the entire premise of the bullishness around this AI theme is emanating from the performance of the stock prices. When did Mark Zuckerberg stop spending money on the metaverse? When his stock price fell by 70% and people were on TV demanding an apology from him. If and when we start to see stock prices stop reacting positively to continued AI CapEx spending expansion, that's when this will end. Only down stock prices can put an end to the rally. I don't think we're there yet, because every time one of these companies says, hey, remember we said we were going to spend X, turns out it's Y, the stock price goes up 10, 15%. In that environment, why would a CFO and a CEO look at each other and say, let's slow down? They're being rewarded for speeding up.
I hate to inflate a very big head already, okay? But I think he's spot on here. The stock market is what's driving confidence. You're seeing come in through some of the consumer data. It's all the high-end consumer. And as far as this goes, the minute you see a crack, which is why CapEx is so important, it's when confidence is going to wane. And I think if you get out of the market now, let's all recognize that if you're early, you're wrong. That's it. The market has punished you for that. And so everybody keeps going on the same path.
So, Amy, BlackRock is said to be near a $40 billion data center deal. There was a Market Watch story that I thought was interesting. It quotes an analyst at a firm called Macro Strategy Partners, says the AI bubble is 17 times the size of the dot-com frenzy and 4 times the size of what we saw in subprime. Michael Hartnett of Bank of America weighing in today as part of the Flow Show note, which we always like to quote. He says, price action, valuation, concentration, and speculation are all frothy and lead to indicators of inflation inflecting higher. But every bubble in history popped by central bank tightening, and no central bank in the world has hiked rates in the past 2 months. Nobody expects any central banks in the world to be tightening policy anytime within the next 2, 4, 6, 8, 10, or 12 months, unless there's a major surprise on inflation that people aren't gathering. How do you want to weigh into this central question in the markets today?
About whether we're in a bubble?
Yeah.
And look, I think
Well, you should just continue to buy these stocks, right? Even if we're in a bubble, like we said, it could be the earliest stages. Like, it wasn't so helpful. Yes, I understand, Greenspan's thing that we look back on, but was his statement of irrational exuberance, was it helpful to investors then?
Obviously not. No, obviously not. But I think, but then we were in a bubble and it corrected 70%. So you could have gone out early and still done okay.
4 years earlier.
Not 4 years earlier, but if you started selling in 1999 and missed the last 20% up and then missed the 70% swoosh, you were doing okay. I think the central question around AI is whether it's a natural monopoly. Like, how many people are going to win in this? This will certainly happen. AI will improve productivity, but there are lots of big CapEx infrastructure things that improve productivity that don't make a lot of money. And so that, to me, is the big central question here. Search is a natural monopoly. You've seen Google at trillion-dollar market caps. Social's a natural monopoly. You've seen Meta. The question is, are we going to have 6 AI players that all compete with each other and therefore drive down prices, like airlines, like Wi-Fi, like lots of other infrastructure projects? In that case, the equipment makers, the NVIDIAs will do fine, but you're not going to end up with the trillion-dollar, ChatGPT might not end up being a trillion-dollar company.
Oh,
I know that's
it's
heresy.
on the way there. You wait till OpenAI goes public,
right.
and then we're going to have these kind of conversations all over again, but on steroids.
Right, and it might start out that way, and then you have to see what the profitability and the return on all this CapEx eventually is, and we're still a ways away from that.
Yeah, they're the great big bets.
Right.
By the way, as part of that flow show note, Steph, you had the biggest ever weekly tech inflow, $9.3 billion. It's the biggest on record. So just follow the money. Investors obviously aren't worried yet.
I was just going to mention, I talk to a lot of chief technology officers. I'm sure you do
Right.
as well. And they're spending on 2 things, double-digit growth from now until the end of the decade. One is AI, because they don't even know what it means for their business, and they're learning it every single day. And the second place that they're spending is cybersecurity. You've heard me say cybersecurity is going to be bigger than AI because AI is not safe. But these are the 2 areas that they are spending double digits. They're going to spend maybe low single digits elsewhere too, but this is something that is absolutely significant.
Well, speaking of cybersecurity, you just bought more CrowdStrike.
Yeah, we did. I agree with you. I think CrowdStrike, if we went to the user conference a couple of weeks ago, AI is not going to have, no enterprise is going to put in AI until they know it's agentic AI, until they know it's secure. So
they raised numbers huge at that conference too, right?
Exactly.
20% versus 11% expectations.
Yeah,
amazing.
Well, it's one of the reasons why RBC today says we believe the AI bear case for software and the narrative there is overdone. The point being, you just better be in the right software stocks.
Right.
Right. It's not. You can no longer make a big broad bet on software because
some will be
it's going to have a disruptive thing, either on fundamentals or revenue flows and things like that. You wanted to weigh in on something?
Yeah, I mean, I would say, the record tech inflows, the chase is on into year end. Only 30% of active managers are beating the indices. Positioning net is 55% across aggregate. Yes, CTAs are long, but when you look across the whole body, at 55%, that's not overly extended. It's frankly a little light, and you're going to see managers chasing in the year end. So I think that's why you're seeing this record tech inflow.
Josh, NVIDIA, 7th day of gains in a row, the longest streak since November of 23. Amazon gets a target bump to 275 from 240 by Goldman Sachs. You own both of those.
Yeah, look, one of the things holding people back from the NVIDIA story is they thought they missed it. When a stock spends a few months consolidating and then finally breaks to a new high, all of those people who were like, I'll buy the summer swoon. September is the coolest month. October is so we go through these months and these big bad events don't happen. You don't get NVIDIA at 160. Then it's sitting there at 185, and it's like, you know what? Whatever. Just pull the trigger. We'll buy it here. I know nobody will admit that professionally, but I talk to people in bars and taverns, and I know that's exactly how it works, which is why I like new highs. So I wouldn't be surprised to see this thing with a 2-handle in short order. Doesn't mean I would personally go chasing it here. I'm also not a seller. This is just the environment that we're in. People have to get used to it.
best week since June, by the way, for the semis. Micron record high, up 21.5% this week. Lam Research, Rob, that's you, up 15%, record high today. Teradyne, Stephanie Link, up 52-week high. It's up 9%. On the week. What do we make, Robbie, and then Steph on this trade this week?
So listen, we have exposure across the entire semi ecosystem. It's
Taiwan Semi, Applied Materials, NVIDIA, obviously KLA, Lam, and ASML.
All of it, all of it. And, you know, it's been a great place to be the last 6 months. They continue to benefit from the AI CapEx. The cycle is looking bigger and longer than I think most of us could have expected, yet they're a little extended here in the short term. You know, I would love to see a little bit of pause, and but the fundamentals are still really, really healthy, and their PEs are really relatively low in the mix that you talked about.
I mean, Teradyne for me is new because I picked it because it has lagged the group. And I think the stock, the valuation makes a lot of sense. At 21 times EBITDA, that's not super cheap, but the long-term average is 29 times. It's twofold story. Semiconductor testing company, and they benefit from the next generation chips, which is what we're all talking about. And then robotics, which really hasn't even taken off just yet. And I've been a big fan of robotics in general. I own Rockwell Automation, and I think that robotics is only 14% of Teradyne's business, and so they've got a big customer, Amazon, and I think they're going to grow very nicely with Amazon as Amazon builds out their robotics. So I think that there are places to pick and choose. You know, I own Broadcom. I would not be adding to Broadcom here, but I'm trying to find some names that maybe are little gems, hidden gems.
How about this Apple downgrade today, guys? Underperform at Jefferies. They had it at hold. 205 is the price target. That's about 20% or so downside from here. Charts look pretty good. Obviously, since you take it back a little bit, it's had a nice run. It's still year to date just plus 3%. It points to the underperformance that it really started the year as. Quote, solid demand for iPhone 17, quote, has led to excessive expectations on 18 Fold. That's that new foldable phone that we expect from Apple. And the replacement cycle there, we do not doubt Apple will make the most beautiful foldable phone in the market. But the question is the TAM, the total addressable market, of a $2,000 phone. Amy.
Oh, gosh. A $2,000 phone is an expensive phone. Look, we own Apple. We've owned it forever. I'm not buying it here. I think it is expensive for the growth rate, but I also don't see it going away. I don't see anyone chipping away at Apple's stronghold on the high-end consumer. And so, there's worries about tariffs, there's worries about supply chains, lots of things. But I think this is one that you hold, but we're not adding to it right now.
Josh, what's your take on another big talker, and that is possible cracks in private credit? You've had a couple of high-profile bankruptcies. Some are wondering whether they were canaries in the private credit coal mine that people have been trying to weigh in on, including the famed short seller Jim Chanos. He spoke to the FT, in which he compared this $2 trillion market to the packaging of subprime. Quote, with the advent of private credit, institutions are putting money into this magical machine that gives you equity rates of return for senior debt exposure, should be the first red flag. Mark Lasry of Avenue was with me on Closing Bell yesterday. Weighed in too. Let's listen and we can react on the other side.
What ended up happening is you were able to borrow money very easily. So you borrowed more than you needed, and you did it on aggressive assumptions. So if anything ended up happening that was bad, you were going to have a problem. And that's what's happened with these two companies. So if you look at what's happening in the market, what's happening is the economy is slowing down. Mm-hmm. So because of that, you're going to have less growth. You're going to have less earnings. So you're going to have more issues. So this could be the beginning.
I'm wondering what you think about, Josh, especially when you take into context what private equity stocks have done. Probably this year's biggest disappointment, considering where expectations were coming in of big deals going to happen. You're finally going to have exits after a big freeze up in the last few years. Week to date, Apollo's down 7.5%. Year to date, down 23%. KKR on the week down 5%. On the year, down 14%. What do you think?
So on the private credit side, in past cycles, people would obsessively follow credit spreads, and they'd look specifically at junk bonds over treasuries or junk bonds over investment grade. It's tougher to do that now. The issuers that make up things like the HYG or the JNK have never been higher quality. They're actually not even really junk issuers if you were to compare them to the types of junk bonds that we had in the market in prior cycles. They have tons of cash flow coverage for their interest payments, and they all were able to term out maturities and issue debt at significantly lower than normal interest rates. So that's not where the action's taking place. I think the smart money is watching the BDCs. These are publicly traded equity-like vehicles that do things like direct lending. They have leverage, of course, it's part of the business model. They are lending to companies that also have leverage. There's all sorts of questions about whether or not all of these loans were good loans. Of course, we won't know until after the fact, but those stocks have a great degree of volatility now relative to, let's say, 3 months ago. And I think those stocks are where people are watching the action in order to determine, Judge, whether or not it is going to be a canary in the coal mine. I think obviously not all BDCs are created equal. Some of these are better actors than others. But if you ask me what to keep an eye on, that's where I would be focused at the moment.
Yeah, Rob, weakening economy certainly, making some people a little nervous about what could potentially happen if it gets weaker. As Lasry was pointing out, well, the saving grace could very well be the Fed's cutting interest rates. So that's a helper too. Goldman Sachs, by the way, on the alt managers, they say the recent sell-off is a compelling entry point. BMO's bullish on the alternative asset managers, including your Blackstone. Josh owns Carlyle, but other names are certainly in that area as well. They go 190 on Blackstone. What do you think about this issue?
So this issue is one that can go from bad to worse, but I don't think it's going to. When we lived through this in 2008, it was back leverage that was the problem, 2008, 2009. What happened is when the loans repriced really aggressively, they got called out of the back leverage and there was forced selling. A little bit of that had to do with Lehman Brothers problems back then too. But the reality of it is as long as you have strong underlying credits, as Josh said, as long as you have plenty of liquidity chasing this market, refinancing happens. And so we should be able to get through this, especially if there's an economic breather given to us by the Fed.
One of these companies that recently filed had a very strong credit rating, which takes you right back to 2008 when the credit rating agencies, many of them were asleep at the wheel as a lot of this stuff was going on. And only then, after it blew up, did people say, oh, yeah, you know what? We should have been more concerned with the leverage that XYZ business had. As somebody put it yesterday, the whole area around private credit has been both opportunistic, obviously, and opaque, which is the problem. The whole shadow banking system, which people have been talking about literally since 2008 and 2009, and we haven't seen a big problem related to the shadow banking system. That's why some people are nervous.
Yes. I mean, the amount of money that went into the space in such a short period of time, you have to think that probably some things got done that shouldn't have gotten done. I mean, even private equity is now over a $10 trillion asset base. So that's a lot of money to put to work. You just saw the EA deal for $55 billion coming at a premium to public market valuation. So what you've seen in private equity is that the discounts that they used to be able to get businesses at, they're not getting them at those discounts anymore because they just have so much money to put to work. So naturally, the returns are going to go down. And you're seeing some of that in the private credit space as well.
Not to mention the fact
Judge?
Yeah.
Sorry, very important point to bring out here. Not everything in financial services reacts well to falling interest rates. I think for the viewer who doesn't understand this, a lot of the loans that we're talking about are being made as floating rate loans, which means as the Fed reprices overnight rates and everything in the fixed income ecosystem then follows suit and reprices accordingly, all of this activity becomes less profitable to the lender. It's floating. It's as simple as the interest rate goes down.
It improves the credit.
Helps the company, sure, but it's a double-edged sword. And now, if we start hearing about non-accruals is a euphemism for deadbeat borrower. So if we start hearing about more non-accruals, and we look at some of these BDCs as sort of like an avatar for the whole space.
Yeah.
They're all making year-to-date lows right now. Many of them now trade below April. That's where it gets concerning.
I want to get one more point in before we have to take a break, and it's the fact that why is this so relevant? Not just at a very high level, not the 30,000 foot level, but the fact that regular investors have had access to these types of products for the first time ever. Netflix, people, worst week since April. So Elon Musk posted earlier in the week to cancel Netflix account. The activist Robbie Starbuck reposted that. So just a lot of noise around Netflix. Oppie is out defending it today. They reiterate their outperform. $1,425 is the price target. Josh, you want to talk about this stock and what's been going on around it?
Yeah, look, this is like every publicly traded media company's worst nightmare when the mob turns its attention to something that they're doing. And we've actually seen real-world effects, not just on stock prices, but on companies and how they conduct themselves. So I wouldn't completely dismiss out of hand Netflix having a rough couple of weeks, but I don't, my personal opinion, nothing to do with the programming or the controversy itself, I don't think it'll produce a lasting effect on the stock price, and I don't think Netflix management is going to come out and do anything to make it worse, which we have seen at other firms over the last few years. So if I were looking at the stock as a new entry, I would look at this more of an opportunity as opposed to a reason to sell. Personally, I own the stock right now, not selling.
Okay, let's talk about Bitcoin for a minute because it's been surging lately. We can look at the chart. Coinbase, by the way, there's Bitcoin. Look at that ramp up into the day. 123, just pushing 124,000. Coinbase having its best week since June. It's up 20% year to date. Upgraded today to a buy from neutral, target to 417 from 325, and that's at Redburn. Stephanie Link, you own Coinbase, and you bought it not that long ago.
Last week.
Wow. Okay.
Yeah, I bought it last week. I want to have crypto exposure. I have no idea and no edge on what Bitcoin, the price, is going to do, or any of the cryptocurrencies. But I like the exchanges because all you need is a buyer and a seller. And that's what this company does. And they have 100 million users. And it's just very diversified. They have 240 different kinds of cryptocurrencies. So really like the management team. And I just wanted to have exposure. Risk-on way of playing lower rates.
Okay. Rob likes to drive fast cars. He likes to own fast car stocks. Ferrari initiated buy 570 as the target at Berenberg. They're looking for only modest volume growth. They do believe, though, investors in the name can achieve attractive long-term results. What do you think, Rob? Upgraded at HSBC yesterday, and it was up like 3% yesterday. What do you think?
I think this goes back to Josh's comments. As long as the stock market's rocking and rolling, I think people are going to be buying these cars. And it gets back to feeling good. You're seeing an incredible bifurcation between the high-end consumer and the low-end consumer, and the high-end consumer continues to spend. This is not a company that's immune to tariffs, though. It's going to impact them reasonably hard, I think, over time. They're not passing all that through onto customers. So what that means is they're bearing some of that responsibility. But this is a company that has software-like margins. If you were to compare Ferrari to Porsche, both cars that wealthy people buy, right? You're going to see the performance of Ferrari stock has been incredible relative to the performance of Porsche.
All right, we're breaking. We're coming back. All right, best stocks in the market from Josh Brown. The spotlight today is on Viva, VEEV, on the list since May 29th of 2025. Tell me why.
This might be like the only time this stock has ever been mentioned on the network. Nobody talks about it, but it
could be the last time too.
It's this incredible company, Scott, and it literally is demanding that we pay attention to it based on its performance. So the stock broke out in May. It has since been consolidating just below those 52-week highs. It's got an all-time high that's somewhat higher from 2021, but this is a much better company now than it was back then. Basically, every time you hear a pharmaceutical or a biotech CEO extolling the virtues of what AI is going to do for their business, they're probably excited because they're working with Viva Systems. Viva is effectively becoming the industry standard CRM platform for drug discovery. And they've signed some of the biggest companies in healthcare, Bristol Myers recently, and they've got a product called Vault CRM. What's changed with this company over the last couple of years, and the reason why it's rallying so hard, they used to have a system that was built on top of Salesforce itself. and they've spent a ton of money in CapEx to build their own system, so they're off that OEM system. It's called Vault CRM. And I want you to hear the fundamentals here, because this is not just a chart. Net income this year up 36% to 714 million. That's up from 525 million in the same in fiscal year 2024. Operating margins look great now that they've built the platform, back up to 25.2%. This year is going to be the company's most profitable year in absolute dollar terms back to 2020. So they've made this huge investment. They've built out their own product. They're signing large deals with some of the biggest companies in pharma and biotech. And again, it's a stock that not a lot of people know about while they increase market share. So it's not a cheap stock, nor should it be. It's operating at a very high level. And I think the $300 level has been resistance going back to May. If the stock can get above and stay there, I think we're in a new leg of the bull market, and I would want to be long. The stop loss here, very simply, 260 to 265. That was support. That was prior resistance. I think that becomes support. So that's your risk reward.
All right, let's talk about one more call today. It's Chipotle. Stephanie Link reiterated buy $63, the target at Loop. They have increased confidence that the comps have recovered after declining during the first half of the year. The loyalty program, they suggest, has ample room for membership expansion. Stock's down 28% in 3 months.
Well, it's been a horrible stock year to date, absolutely horrible. But it has been always a second half of the year story in terms of new products, store openings, restaurant margins improving. What I thought was interesting is yesterday credit card data came out for Shake Shack, showed that their first quarter numbers, sales up 13%. That implies that the consumer is going back into these places. And I think you're probably a low bar. If they do 2 or 3% in terms of same store sales, I think the stock can really go. And also, they're buying back stock the most since their E. coli breakout. And that's for me, that's a confidence builder.
I mean, what if they're just liking Shake Shack like Josh does, but he's not going into Chipotle like others?
Every Gen Z is going into Chipotle.
Well, if they were, then you wouldn't have the problem with comps in the stock, would you?
Well, you've had a problem for the industry, actually, in terms of traffic. I mean, Shake Shack hasn't done all that well this year either. So I think that you've got...
Josh.
Those are fighting words with him.
But no, it's true. It's been a very tough segment within the consumer services business and segment, and I think that it's poised to do better, recover in the second half of the year, including Shake Shack.
Well, there's a rocky-looking chart.
What is that?
Josh, give me a final trade.
Archer Aviation was just named conviction long for Q4 at Deutsche. These stocks, Joby, Planet Labs, we talked about them Tuesday. All of them are having an unbelievable week.
Threw Josh off his game for a minute there.
I thought he was going to pick Shaq.
I'm just hungry now.
We all are, believe me. Rob.
JP Morgan, like the setup headed into earnings 2 weeks out, think financials can lead into the fourth quarter.
Amy.
Shell, a well-positioned company in an unloved part of the market right now.
Stephanie Link.
Capital One, I like the Discover financial deal.
All right, I'll see you in a couple hours' time on the closing bell.
Hey, everybody. Welcome to Blue Cloud Trading. I'm George. Today, it's actually Sunday, October 5th. I didn't get a chance to record a video on Friday, so just basically doing a little catch-up here. I wanted to make sure that you guys got some info on the markets so that you're ready for tomorrow, for Monday. And here's you can see the markets, how they performed at the end of the day on Friday, where they closed. The Dow was up 0.51%. All right, we had the NASDAQ down 0.28%. S&P 500 up just 0.01%, and the Russell 2000 was up 0.74%. In this video, what we're going to do is we're going to cover the stocks they talked about in this prior episode here of Halftime Report, some clips from there. Now, we're also going to cover the ETFs that you see here, like the SPY, the Q, the Dow, the Russell, the Euro stocks, the VIX. Here's a list of the stocks they talked about. There's about 15 stocks and ETFs that they talked about on the show. And I've highlighted some of the strongest ones with a blue flag here, and I'll explain why those are the strongest ones and why the other ones aren't so great. And you may want to consider holding off on adding positions to those stocks. We're going to talk about Apple, Tesla, and Meta, as well as some member requests. We've got 3 stocks over here that we're going to look at, like Shopify, for example. Okay, so let's get back to the FinViz here and just check the map, the heat map for Friday. And this is what it looked like at the end of the day. You can see Meta was down 2.27, Tesla was down 1.42, Amazon down 1.3, Palantir down 7.47%, AMD down 2.98, Nvidia down 0.67. What stocks did well? The financials. A lot of the healthcare stocks did well. Utilities did pretty well. The energy stocks, for the majority of them, did well. The industrials were mixed. And if we take a look at the groups here, what you'll find is, let me just zoom in for a moment so you can see that, yeah, healthcare, utilities, and financials and energy, they were the top four, right, sectors. And then we have communication services and consumer cyclical at the bottom. And this is what the 1 week performance looked like. Healthcare really was up quite a bit, up 6.56% compared to technology, right? So double the move up for healthcare this last week. All right, now let's get into the stocks. We won't spend too much time on these. We don't really need to, actually, with the help of an indicator I'm using here. It's called Ichimoku, and it's really easy once you understand the rules. And just briefly, real quick, here are the rules, folks. We want the price to be above the green line. That's the 9 period highs and lows divided by 2 of the last 9 periods. That's called the Tenkan-sen. We want price, these little candlesticks here, to be above the red line right there. That's the Kijun-sen. That's the highs and lows divided by 2 of the last 26 periods. We want price to be above the Ichimoku cloud, that cloud that you see right there. Okay, what you're seeing here is the Senku span A. That's the light colored blue line. That's the top part of the cloud. That's the midpoint between the two moving averages, projected 26 periods into the future. And then you've got the purple line, which is basically the midpoint, the highs and lows divided by 2, or highs and lows divided by 2 of the last 52 periods. In this case, 52 days, and that's actually projected 26 periods into the future. Very unique indicator. One last part is the Chiku span. That's today's closing price. If you basically look at today's closing price and project it 26 periods into the past, that's where you'll see that line. So that's the closing prices in a line form. And what we're looking for is for price to be this white line to be above the candles. That's a bullish signal. So when price is above all of these moving averages, and they're all in the correct order, where the green line is above the red line, the Senku span A is above the Senku span B, that's all really perfect. That's exactly what you're looking for a strong uptrend. And you can see it's, very easily here that, yeah, the S&P 500 has been in a very strong uptrend since it broke through the cloud here. Once we had that crossover here too, it started to basically breaking through that downward channel. Remember, price was under the cloud for a while there, back in February, March, and April, and things started to turn around in May. So let's look at, so the S&P 500 still looking very bullish. I like it. Here's the QQQ ETF, also very strong still, even though it was down 0.42% on Friday. Still looking good. The Dow Jones DIA ETF looking good here. Look at the volume also coming into this ETF. It's been moving up right there. The ADX is moving up. Positive DI is above the negative DI. That's also bullish. We want that green line above the red line, and we want that white line to be moving up. When that occurs, that represents momentum is increasing. So this is good for the Dow. Up 0.52% on Friday. Russell 2000 was up the most, 0.74%. Doesn't look like it from this candle here because that is a kind of a reversal type candle, but the fact that it broke above that 244.46 level, which is a monthly level, if we switch it to a monthly chart, you can see it goes back to that candle there from 2021. Okay, so we got above it. Now, here's the thing. This is a monthly level, which means that technically speaking, we need to stay above that 244.46 level by the end of this month. Okay, we need to close above that level to see a continuation. So we still have quite a few days left in the month of October, but I can tell you that right now it's looking good. Here's the weekly chart. You can see it emerging, popping its head above, checking out to see what's up, and we're going to see if it can continue moving in the correct direction. That's what we want to see. Here's FEZ, the Euro Stoxx 50, taking a stall, basically stalling after this big jump. This last week, it moved up quite a bit. If you look at the weekly chart, it broke through this consolidation stage here that we've had for quite a while, all these months here through from May all the way to where we are right now. I mean, it's been stuck. This was an important week for the Euro stocks, partly, I believe, because of the shutdown, government shutdown that's happening in the United States. I think people are thinking, you know what, maybe it's a safer play to buy Euro stocks, at least for a little while this whole thing, materializes and we figure out where things go. The VIX hasn't really moved that much, right? Only up 0.12%, very flat. This represents volatility in the markets, and that's why, we see the markets continue to move up, because the VIX hasn't really moved up. The fear levels aren't quite there yet to push the prices down. All right, let's get into the stocks now. We'll start off, like I said, with the strongest stocks at the top here. And we've got ACHR. Let's look at ACHR. Here it is. Josh Brown's final trade. Archer Aviation, Inc. And this one did, in fact, break through the broke above the 2 moving averages on this last week. This is a weekly chart. So it broke above. It is showing some strength, up 13.65%. Josh Brown bought recently. This was back on June 12th. So he's been in this for a little bit. So if we look at the daily chart, we can go back to June. Let's go back to June for a moment. June 12th. All right, June 12th. Let's find that date. Okay, so he was recommending it right around here. It's actually down 2.4% since June 12th. All right, from the opening price, it's down 3.22%. But so it dropped, came back up, dropped under the cloud again, and now it's starting to show strength once again. You can see the volume coming in. You can see the ADX looking bullish here with the directional movement index. And even the cloud itself is starting to turn bullish again. So remember I mentioned how the Senko Span A should be above the Senko Span B. That's happening right now. Price is also above that 200 rising, moving average. So that's also bullish. That's the daily chart. Here's the weekly. Let's go to the next one, folks. BLK, BlackRock on the weekly chart looks good. Even though it did create a reversal candle, a spinning top. On the daily chart, it's still moving along here. All the elements of Ichimoku are strong. Chico Span is above price, but it's kind of stalling a little bit. It's not real. There's not a lot of momentum. You can see it from the ADX. See how the white line there is just kind of dropping? That's just telling us there's really not a whole lot of interest. I mean, right now it's just moving sideways. There's some sideways action, and we are still below this high here from August 13th. So, CrowdStrike on the daily chart. All right, it's pulled back a little bit today. On Friday, down 1.39%. Here's the weekly chart. Not bad. It looks pretty good still. I did close my position out back here on July 10th. And it did drop. And then it found some support at the 26 period, which is a very common thing. And now it's starting to retest to see if it can maybe break above this level here, which is the high of that candle, 517.98. Okay, that's what I'd be waiting for. Here's Shell, the oil and gas integrated, and out of the UK. Now this one's been under the 74.61 level for quite a while. You can see the multiple days here back in 2024 where it found resistance, and then again here in 2025. Let's see what that date was there. That was around March 28th, 2025, and it dropped. It came close to it here on August 29th and dropped. And so that's what I'd want to clear first before I consider a long position in this particular stock. But otherwise, it does look bullish as far as price being above the moving averages. Bullish cloud here on the weekly chart and on the daily. All right, even though the cloud is just barely, you see the Senko Span A just barely popping its head right above that Senko Span B. The 200-day moving average is also rising. That's a good sign too. SMH, that's a semiconductor ETF. That looks good on the daily chart. Very nice. TER looks good, except for the fact that we've got a reversal candle here. It could pull back a little bit, maybe down back to the 138 level and retest that. That's about a 4.5% drop. But right now it's still moving up. Here's the daily. Here's the weekly chart. You can see it breaking above that 138.43 last week. It might find some resistance here. In fact, it looks like it did. Hold on. right there. That's a weekly level. Let me color that blue for weekly resistance. It's 144.16. It got above it. It got above that candle right there. So let me circle it so I can show you. See that shooting star right there? Okay, so it got above it, and that is from January 10th, 2025. So it looks like it's moving in the right direction here. Here's the daily chart. I just wouldn't add on a negative candle like this when price is a little bit far away from the moving averages. VEEV is the ticker symbol for Viva Systems. This one's also moving up. It's above the moving averages. The cloud is also bullish. However, with that said, it did break above that 298 level there briefly. 298, what is that? 298.29 or something like that. And it's underneath it right now. So this may be a false breakout. So I would not be adding until we get some more clarification on this one. You can see it's been in a sideways consolidation stage for quite a while, since June. Okay. XLK technology ETF here dropped a little bit, down 0.5%, but still holding up above the moving averages, above the cloud. I like it. BX Blackstone pulling into the cloud here. That's the financial services sector, asset management. I would not be adding here. This is a weak stock. You can see that's why it doesn't have a blue flag here. I did review all these stocks before, doing this analysis here for you guys. Here's CMG, also currently under the cloud, under the 200-day moving average. This is as bearish as they get. I'd stay out of that one. Yes, a little bit of strength. It was up 3.7% on Friday. You can see it popped its head here above the Kijun and the 26. And this could potentially lead to something bullish here. But there's no guarantees, and it's still in a very, it's obviously an embedded decline here. We've got a series, folks, of lower highs. So this is a lower high from the prior high. All right. And yeah, it broke that trend line that you see right there. And yes, we did create what looks to be maybe a double bottom right there between those two lows. And yes, we did break above that level, but this is important. The cloud itself is waiting for as a level of resistance. That's only about 3.5% away. So that's a very short target. And then you've got more resistance above. What about COF? That's Capital One Financials. That's inside the cloud. No on that one too. All right, Chico Span is underpriced. This is looking pretty bearish. Coinbase is above the cloud, but this not all the elements are correct. Senko Span A is still under the Senko Span B. All right, and that's the daily chart. Let's look at the weekly. Weekly doesn't look bad at all. Okay, so weekly looks bullish, but the daily needs some work. JP Morgan. This is a stock I closed out of this week, actually. I closed out of it. I did not add here. I added it back on August 12th. Closed out on, what day was that? On October 1st, Wednesday, for just a 7.2% profit there. Now I found some support at the Kijun. There's a possibility that this thing could pop again. This is a strong trend on the weekly chart. All right, so you can see multiple times that I've held this position. And yeah, it's still in a strong uptrend in the weekly. So I like it. Overall, I just, you'd want to wait for a new buy signal. Oh, and I forgot to mention, guys, that I did put out another members-only video this weekend. You may want to check that out. All you need to do is go to my homepage on YouTube. It's called Blue Cloud Trading. All right, and this is the members-only video. You'll see at the very, very top. And to access this video, what do you need to do? All you need to do is click on this join button. See this link here, or this join button here, or this link, either or, and you'll be able to access that members only video. Now this is what will happen. It will give you three options. In order to view the video, you do need to either become a Blue Cloud trader or Blue Cloud Legend level member. I do appreciate those of you who have become Blue Cloud supporters. It helps the channel so I can continue bringing these videos to you. Without the memberships, this channel would go away. So I do appreciate all you guys. And in these, under these memberships, you get additional perks. Like I said, the exclusive member-only video where I go over my entire portfolio each weekend. And the Blue Cloud Legend level member where I give daily trade updates. And you could find those under posts. Once you become a member, it will either pop up under posts or under membership tab, the membership tab. All right. All right, let's get back to the stocks. Here's RACE, RACE. That's for Ferrari. That's the ticker symbol. And on the daily chart, it looks pretty bullish. Price is above the moving averages in the cloud. On the weekly chart, let's see. It actually looks pretty good. So let me just double check the daily again. All right, let's see the daily chart. Yeah, I think this has some potential here because, yeah, everything does look like it's actually working here. I'm not sure why I didn't give that the flag, but yeah, it certainly justifies. Here's what's occurred basically. If you take a look here, we've got ourselves a higher low from the prior low, and we've also taken out. We did take that out right there, but it did come back under. So let me just get the exact dollar amount for you. The high of that candle is 498.70, and we did close above it. So that is a bullish signal, and it's holding up above that level. So I think this one has some potential to continue moving up. Let's give it a flag. All right. Shake Shack, on the other hand, no. It's under the cloud here on the daily chart and on the weekly. So stay out of that one for now. Yeah, it was up 2.37%, but that could be a very short-lived little situation. I want you to notice something else. On the weekly chart, notice how the ADX is moving up and the negative DI is above the positive DI. That's not a good sign. We want that green line always to be above the red line. Over here, if you look, if you go straight up, that led to a nice move up. The second that the red line crossed above the green line, what happened? And it happened, by the way, on high volume. Do you see that? Let's go straight up right there. And it led to this decline. All right, so that's something to keep in mind, is use the directional movement index as more of a confirmation tool. But I'd stay out of Shake Shack for now. And that's that for those stocks. Let's go into some of the Mag 7 stocks like Apple. Apple continuing its move up, but it still was unable to break through that $260.10 level. It stalled right around there. That's the prior high from 2024. Yeah, December 27th of 2024. So the fact that it came to that level and stalled, I'd be a little bit concerned. The other thing I also noticed here is that the volume has been declining. See that right there? As price has been moving up, that tells me that it's losing some steam here, maybe. Let's see what happens when it, this coming week on Monday. Can it break through the 260 level? If it does, there's a higher probability that it will continue to expand to the upside. Tesla, on the weekly chart, has created a reversal candle. That's called a negative spinning top after this move up. It's a little far away from the moving averages. On the daily chart, you can see here it was down 1.42% on Friday. I did bring this up on Thursday, this bearish engulfing pattern. For those of you who watched Thursday's video, it was based on those two candles. It's when you have a large red candle engulfing a smaller bullish candle. When that occurs, there's a higher probability the price will go down. Why? Because price opened up, it gapped up to that level, and then closed at the very bottom below the opening price of the prior day's candle, meaning that the bears were completely in control here, and they dropped it. It closed under the 9-period moving average. Not good. And you can see the higher volume right there too, and then it continued on Friday. All right, next, let's look. There was a little bit of buying happening at the end of the day, so maybe something might happen here. If you look at the 5-minute chart, you can see around 2 p.m. or so, it did move up a little bit from these lows here, about 3%. But it was still down for the day, down 1.42. This is what it looked like on the 3rd and on the 2nd. So maybe it will emerge out of the cloud. You never know. Here's Meta. On the 5-minute, does not look that great. You can see it was down 2.27% on the 5-minute chart, under the cloud the entire day. On the weekly chart, okay, closed under the Tenkan-sen. That's a bearish sign. Closed under that 721.73 level, a daily level, based on that candle, that prior low. So that's not good either. Yeah, it doesn't look too good here for Meta. I think it's going to drop some more down to the next down to the 691.20. That's maybe another 2.5% before it might find some support. That's based on that prior low there. And it does have some support down below the 200-day moving average that has been rising. But this is not a good sign. You can see that slope right there is a lower high right there from the prior high. That's also not good. Okay, let's get into these other three stocks here. EOSE, one of our members' stocks requests. And now this one here, let's start off with the weekly chart. Technically very, very good, right? You've got price above the Ichimoku cloud, above the moving averages. It's moving straight up. In fact, that closing line right there, the price in a line form is going straight up like a rocket. That's positive. That's all positive. And the volume also has been increasing here to the upside. Is it getting a little bit overly extended? Maybe, but it looks still very valid as far as technically sound. On the daily chart, on Friday it was up 1.94%, but this is not a particularly bullish candle. It's a shooting star candle, but it is really close to the moving averages here. So it's got support. I mean, even though it looks visually very close, because this is a relatively volatile type stock, to the next level of support, it's about an 8% drop, just so you know. Just measuring that, almost 8%. So if it does pull back some more, it's most likely going to find some support at the Tenkan. Just since August here, if we go back to, actually, let's see, when did it pop through above the Ichimoku cloud? You can see it was under here, got back above it right there. That was on July 18th, 2025. It's moved up 109%. So it's a really volatile stock, something you should be really careful with. It's still not a profitable company. As you can see here, it's negative 2,422.46 profit margin. So just be cautious with this. But look at that sales growth rate, 144.24% over the next 5 years. But look at the price of sales, 36.01, really high. And yeah, the beta says negative 0.37. But the reason why this thing moves so much is because also based on the price itself. It's a $12.60, stock per share. So yeah, something to keep in mind. All right, let's go to the next one, Shopify. This one here, let's start with the weekly chart. As you can see, it found support here on at the early part of the week. It actually gapped up and right on the top of the Tenkan and continued to move up throughout the whole week. So it broke through. There we were on that was Monday, September 29th. Okay, it moved up 13.48% since Monday. Breaking above the high there of this candle. So Shopify looks good. I had a position in this back here from August 28th until September 23rd, where I closed out the position. It pulled back a little bit. Now it's starting to show strength again. It's more than likely to continue. It looks good. I've got nothing negative to say here right now at this stage. I personally didn't get back into it, but there were other opportunities I was looking at. So, but Shopify looks good to me. I like it. I think it's got more potential to move up, especially since if you look at the weekly chart. Let's see. One thing I would watch out for, guys, is this high up here. Let me switch it to a monthly for a moment. Let's find out what that exact level is. So that high right there is 176.29. I'm going to color it purple. That's kind of like basically your next target, in my opinion. All right, that's where I would shoot for. If it can reach that level, it's got some potential. I mean, it can move up another, looks like 9% almost to reach 176.29 from where we currently are. So I like that. And then we'll be hitting all-time highs at that point. What about BMNR? Here it is on the monthly chart. Now, this is a Tom Lee's. He was appointed chairman, of Bitmine Immersion Technologies. This is a stock that's pivoted to focus on building an Ethereum-centric treasury, aiming to become the MicroStrategy of Ethereum. MicroStrategy does this with Bitcoin, and Tom Lee is trying to replicate that concept with BitMine Immersion Technologies. How has this thing been doing? Now, this is the date that Tom Lee got in. And the stock had a quick pop, and then it fizzled out here. Right now, on the weekly chart, if we look at the weekly chart, it's been moving sideways. It's under the Kijun-sen. On the daily chart, it's inside the cloud. So I wouldn't be jumping into this here. It doesn't look like the optimal entry point, in my opinion. That's going to do it for this video. Thanks for watching. Don't forget to like, subscribe. It really does help. And you know what really helps the channel, believe it or not, is when you share this video with someone, anybody. Because that's how we can get new subscriptions. We can get more people interested in learning about technical analysis, you know, and it will make your trading better. You'll have, you know, hopefully a higher success ratio, because if you have knowledge on the fundamentals aspect, right, you have an idea about a stock that you want to buy, you can, why not review the technicals, make sure that, yeah, there is in fact some strength and some potential for it. Like the S&P 500 is telling us, yeah, this is a bull market. It's okay to jump in right now. Still, for the time being, everything can change tomorrow, next week, a month from now, obviously. But for the time being, we are in a very slow and steady uptrend that has not stalled, folks. I mean, you can see it right here. So just a steady 45-degree angle, nice upward channel for the S&P 500. At a minimum, you know, you'd make some pretty good money just trading based on the SPY itself. Anyway, that's going to do it for this video. Like I said, have a great rest of the weekend, and I'll catch you all in the next video.